Hey everyone, welcome back to Corporate Decoder, where we spill the tea on corporate filings and, financial secrets. Hope you're ready for a deep dive that's less about snooze fest and more about who's really winning and losing in the telecom and tech game, because today we're decoding TELUS Aggroint's latest report. It's packed with numbers, but also tells a story about their strategy, especially as they navigate a changing market. If you love getting the real story behind the reports, hit that subscribe button and join our Discord community too. It's linked down below. So what's the big picture with TELUS Corporation's filing for the period ending June 30th, 25? Well, it's a snapshot of their financial health and business activities during the second quarter of 2025. There are major Canadian telecommunications company and business activities during the second quarter of 2025. They're a major Canadian telecommunications company, also known for their tech and health services. And they've been making moves to expand beyond traditional phone and internet. Let's jump into some of the more detailed financial aspects. We see mentions of their credit facilities, for example, the TELUS International Canada Inc. credit facility. This is like a borrowing agreement, a safety net of sorts, showing they have access to funds if they need them. The filing specifies details about these facilities, indicating amounts available and terms, which are crucial for understanding their financial flexibility. Now, financing costs are a big deal for any company, and TELUS is no exception. These are the expenses they incur for borrowing money, like interest payments on their various debts. The report breaks down financing costs related to things like derivatives used to manage currency risks, which is a fancy way of saying they use financial tools to protect themselves from losing money when exchange rates change, especially with their foreign operations. This term currency risk for net investment in foreign operations is basically about how changes in currency exchange rates can affect the value of TELUS has a lot of assets in the US and the Canadian dollar gets stronger. Those US assets are worth less when converted back to Canadian dollars, affecting their overall financial statement. And when they talk about derivatives here, think of them as financial contracts whose value is tied to something else, like an exchange rate or an interest rate. TELUS uses these to manage financial risks. For instance, they use cash flow hedges, which are specific types of derivatives designed to offset the risk of cash flows being affected by something like currency fluctuations. This is a critical line item. It shows their long-term debts, like loans and bonds, but adjusted to show how their hedging activities, those derivative contracts we just talked about, have changed the overall value. This helps paint a clearer picture of their actual debt burden after accounting for their risk management strategies. This helps us understand their debt structure by categorizing how much debt is due within the next 12 months. It's important because having a lot of debt due very soon can put pressure on a company's cash flow. This shows the portion of their long-term debt that's due in 5 to 10 years. It gives us an idea of their longer-term financial commitments. TELUS Corporation issues notes, which are essentially IOUs or bonds that they sell to investors. The report details different series of these notes, including amounts and interest rates, providing insight into how they raise capital. This refers to basic shares of ownership in TELUS. The filing provides details on the number of ordinary shares, which essentially means the total ownership pie of the company. Share options are an important part of employee compensation. These give employees the right to buy company stock at a set price. The report details these, showing the company's commitment to its employees and how that might affect future share counts. This section often details executive compensation and stock awards. It's interesting to see how the company is incentivizing its leadership, especially with things like restricted stock units or RSUs, which are shares given to employees typically after a vesting period. Intangible assets are things you can't touch, like patents, software, or even customer lists. When they're subject to amortization, it means their value decreases over time as they're used up or become outdated, and this cost is spread out over the asset's useful life. A good example of an intangible asset is the value of customer contracts. Goodwill is a special type of intangible asset that comes up when a company buys another company for more than the fair value of its identifiable net assets. It's like the premium paid for brand reputation, customer loyalty, or other unquantifiable benefits. TELUS has goodwill, which suggests they've made acquisitions in the past. This is the accumulated profit that a company has kept over time rather than distributing it to shareholders as dividends. It's a key part of the equity section of the balance sheet, showing how much profit the company has reinvested back into the business. This represents the total value of a company's assets minus its liabilities, belonging to the owners of the parent company, which in this case is TELUS. It's a core measure of shareholder equity. We're seeing here specific details on share options denominated in US dollars for TELUS International Canada Inc. This highlights the global nature of their operations and how they manage compensation across different currencies. These are restricted stock units but tied to specific performance goals like customer connection. This shows how TELUS is linking employer reward in key areas. It tells us they are focused on expanding their customer base and rewarding the people who make that happen. This relates to the company's employee pension plans. They are reporting on the status of these, including how much money is set aside to pay future pensions and the obligations they have to their pension recipients. It's a significant area of financial planning and can impact the company's long-term financial health. This is the company's estimate of the total amount of money they'll need to pay out in the future to people covered by their defined benefit pension plans. It's a crucial number for understanding their long-term financial liabilities. These are the assets that the company has set aside specifically to fund its pension obligations. How these assets perform directly impacts the company's pension funding status. These are financial contracts specifically designed to exchange one currency for another at a future date at a predetermined rate. TELUS uses these as part of their strategy to manage risks associated with international business, particularly with long-term debt and foreign currency transactions. This is a more niche financial instrument related to power purchase agreements, possibly indicating TELUS's involvement in or exposure to the energy sector or renewable energy projects. Changes related to the forward element of these agreements represent unbooked gains or losses from the change in value of forward contracts. This relates to the costs companies incur to deliver the products or services they've sold. It shows TELUS managing its operational expenses to ensure profitability on its sales. This points to a specific and important segment of TELUS's business, likely focusing on IT services, cloud solutions, and other technology-driven offerings. It signals their strategic push into broader technology services beyond traditional telecom. This is another key indicator of TELUS's diversification strategy, showing a focus on the healthcare sector through technology and services. It reflects a growing trend of telecom companies expanding into health tech. These are expenses like sales commissions that are incurred to secure customer contracts. How these are managed can impact sales effectiveness and profitability. This mentions restricted stock units, a form of equity compensation. It shows TELUS is using stock-based incentives to retain and motivate employees, aligning their interests with the company's success. Now, looking at the raw numbers, we can see TELUS is actively managing its debt, particularly long-term borrowings. The way they break down their debt obligations by maturity dating, like debt due within 1 year versus debt due in 5 to 10 years, shows they are thinking about when they need to pay their bills. This is a smart approach to avoid a cash crunch. They are also heavily involved in financial instruments like derivatives and currency swaps, especially to manage risks related to their international investments and debt. It's not just about providing phone service anymore, it's about sophisticated financial management to protect their profits and their value. This shows a maturity in their financial strategy. The focus on performance-based restricted stock units, like those tied to customer connection, tells us they're really trying to drive specific business outcomes and align employee rewards with company goals. This is a good sign that they're strategically focused. However, we do need to keep an eye on their pension obligations. While they have planned assets to cover these, the funded status is always something to watch closely, as underperforming assets or changing actuarial assumptions could create future financial strain. Overall, TELUS appears to be navigating a complex business environment with a diversified strategy, expanding into technology and health services. They are managing their debt prudently and using sophisticated financial tools to mitigate risks. The key challenge for them will be to continue executing effectively across these diverse segments and to maintain the strong customer focus that their performance incentives highlight. They are looking to grow beyond traditional telecom, and the numbers in this report show they are making deliberate moves in that direction. Alright, that's our breakdown of TELUS's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your best insights in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the corporate world. Don't forget to check out our Discord community linked in the description for more conversations. Thanks for watching. See you next time.